Even with Jeffrey Dahmer crashing Netflix, one could argue that the stock market is the scariest thing to watch these days. Well, all asset classes really, stocks, bonds, cash, they're all battered and beaten. Take the beloved 60/40 portfolio. Many analysts are calling it on this one. Time of death, 2022. With stocks down over 20% and bonds down over 11%, this is the worst year ever for the 60/40 portfolio. Why was the 60/40 so loved? The classic allocation of 60% stocks and 40% bonds has been a staple investment portfolio for retirees and pensions and endowments. From 1926 to 2019, this tried and true portfolio provided a reliable compounding annual interest rate of almost 9%. Its success had to do with the relationship, technical term correlation, between stocks and bonds. Historically, they have been negatively correlated, meaning they move opposite of each other. The bond portion of the portfolio was a hedge against stock market corrections. And on the flip side, the stock portion was the growth engine, the investment that posted strong market returns during the good times. But not this year. This year, they have actually been positively correlated and moving in the same direction. Unfortunately, that direction is down. So what changed? It's the same serial villain racking your grocery bill. During times of high inflation, stocks and bonds will actually positively correlate. They lose their hedging capabilities. So what can be done to protect the portfolio? Just because the 60/40 crashed and burned this year, it's not actually dead. You don't have to change your whole risk profile, but you might want to consider a few additional preventative measures and diversify your bond holdings. Consider adding things like inflation-protected ETFs, real estate, and commodities to help smooth out some volatility. Eventually, inflation will peak and start to decline, bringing equilibrium back to the 60/40. And if history repeats itself, when the 60/40 does come back to life, it should stay that way most of the time. That's it for this week. This is Jeannie, the 401k lady.